With the right amount of XRP and the proper structure, you could retire in just 5 years, completely tax-free for life. Now, I'm not talking about selling your XRP and paying massive capital gains. I'm talking about keeping your XRP forever and borrowing against it, which is tax-free. Then you'll be able to live off those proceeds while your wealth continues to compound. Today, I'm going to show you exactly how much XRP you need based on the lifestyle goals that you have, why the price predictions we have probably could happen a little bit sooner than later, and the most important piece, how to structure everything so you keep 100% of your wealth protected and working for you. Here's what the ultra wealthy know that most XRP holders don't. You never sell the golden goose, the best asset ever. While everyone else is planning their exit strategy, I'm going to sell at 10 bucks. I'm going to sell at 5 bucks. I'm going to sell at 100. The smart money is planning the exact opposite. They're building structures to borrow against their XRP forever, accessing liquidity without ever triggering a single taxable event. Think about Elon. He didn't sell Tesla stock to buy Twitter. He borrowed against it. Bezos doesn't liquidate tons of Amazon stock to fund his lifestyle. He uses it as collateral and gets a line of margin against it. And now, with institutional crypto lending finally maturing, you can use the same playbook, but for your XRP. Today, I'm breaking down the exact framework that you could use to retire in just 5 years, not by selling your XRP, but by leveraging it. We're going to cover how much XRP you actually need based on your lifestyle and your goals, why borrowing against your XRP destroys traditional retirement planning, and the most important piece, the 5-layer protection system that ensures that no lawyer, ex-spouse, or government agency can touch what you've built for your family. This isn't just theory. This is the exact strategy that my high net worth clients are using today, right now. And whether you're holding 10,000 XRP or a million XRP, the principles are identical. Only your time will change it. So by the end of this video, you'll understand why selling XRP might be the biggest wealth destruction mistake you'll ever make and what the 1% do instead. So this is the question I get asked all the time. How much XRP do I need? Well, let's break down the math. We'll talk about the rich list. If you want to go to rich-list info, you can see everything about the XRP, how many wallets there are, who holds how much. It doesn't say who, but it shows you the full breadth of the ledger, how many addresses there are, how much in them, all those things. This is a public ledger. So you can see how many holders there are and, where you stand in the breadth of the people that are holding this asset. It's not that many. There's only 7 million wallets globally. So that means only 1 in 1,000 people even have a wallet on the planet, roughly. And within that scope, it's really even less than that. We're going to break down why. So 3 million of those wallets hold less than 20 XRP, mostly forgotten dust. Somebody opened a wallet, they funded it. Used to, when you funded a wallet, you had to lock up 20 XRP just to open the wallet. Now they reduced that down to 10, and later on they plan to continue to reduce it maybe to 2 or even less, depending on how things progress here. But really, there's just dust left in 3 million of those wallets. So now we're down to 4 million wallets. The next section, there's about 2.5 million wallets that hold less than 500 XRP. So again, these are accounts that people opened up, maybe moved some stuff around. Maybe there's a few retail holders there, but these are people that they're going to take a long time, if that's how much you're holding, to really have anything appreciable. So that means there's about 1.5 million wallets out of the 7 million that actually have enough to make a difference for them and their families. And if you're in the top piece of that, there's only 2,500 wallets on the planet that have more than 1 million XRP in them. If you have more than 10,000 XRP, you're in the top 300,000 wallets. So if we do the math and we've got 1.5 million wallets that are quote unquote retail, and you've got 300,000 of those wallets that have more than 10,000 XRP. That means if you have 10,000 XRP, you're in the top 20% of retail holders. You're kicking ass. So here's the thing, and this is the question. Again, like everybody wants to know, how much do I need to retire? We're going to break down the math for you. All right. So if you wanted $100,000 a year in tax-free income, that's going to be a lot different than if you want to fund your lifestyle with $1 million a year in tax-free income. The amount depends on your goals and how long you're going to wait for it. So let's go back to 500 XRP holder. Okay. The people that are at the top end of that 2.5 million wallets that are holding 500 or less. It's going to take you a long time. And it's not that it's impossible, right? You're just going to have a lot of patience. You're going to need $100,000 XRP to have $50 million if you had 500. Well, look at Bitcoin. There are people that bought 500 Bitcoin back in the day when it was $1 threw 500 bucks in it. And now they have $50 million if they just let it sit there, sat on their hands, didn't do anything for a decade. They're doing pretty good, more than a decade, really. But I think that's how long it's going to be for XRP to really get to those prices, sometime in the 2030s. Okay. Now, let's say you're in that top 20% of retail holders. You got 10,000 XRP. You're going to need a $5,000 XRP to have that $50 million. And that could happen a lot faster. I think potentially even within the next 2 or 3 years, we could see a $5,000 XRP. And again, that's predicated on a lot of events we've talked about in the past on this channel, and I won't get into that here, but it's possible. So you're in a really good position to potentially retire within that 5-year time frame that we talked about at the beginning of this if you have that 10,000 XRP. Okay, now what if you got a little bit more? What if you've got 50,000 XRP? Well, now you only need $1,000 XRP to have that $50 million. Okay. And the reason I'm looking at $50 million here is if you're borrowing against it and it's continuing to grow in value, you've got enough to put to work to be able to offset the debt and cover the interest payments, and more than enough to live off of, irrespective of if you want that $100,000 a year or if you want that $1 million a year, right? So $1 million a year would be 5%. You'd be earning 5% on that XRP. If it's $50 million, you could borrow $1 million, and if the rest of it's earning 5%, there you go. You're able to service that debt, pay that loan off in the same year, tax free. Your freedom number is going to depend on your timeline, right? So again, the more XRP you have now, the less time you're going to have to wait. And we've already built all these things at Digital Wealth Partners and Digital Ascension Group to make sure that you have everything you're going to need in order to be able to facilitate this. We're doing it today with clients right now. So if you're not quite to these numbers yet, keep stacking, keep DCA. And some of the stuff that we're going to talk about a little bit later with the structures, you might not even need to do yet. If you don't have at least $50,000 to $80,000 in portfolio value, it probably is a higher ROI to just continue to dollar cost average into the asset. Okay. So I know a lot of people in crypto talk about get rich quick. I don't view this way. For me, this is an inevitability. And again, not financial advice. This is just my strong conviction. It's where I'm positioned. And if you're watching this, you probably feel similar, or you're not quite there yet and you're trying to get, a little bit of assurance that this is actually going to happen. So for me, it's a foregone conclusion. XRP is going to be used to be able to facilitate value globally, move payments for SWIFT, the back end of the stock market, treasuries with Ondo, BlackRock, all of the above. And so it's inevitability in my mind that it's going to reach these high prices, but it's coming. So again, not get rich quick, but this is a very strong way that you can use the same strategies as the wealthy with infinite banking and other concepts we're going to talk about in this video to live your lifestyle tax-free and protect it in the next part here when we go over strategy and structure. So what is that 5-layer fortress for your XRP that would keep you from being exposed for loss? Listen, before we talk about borrowing and retirement, we need to address the structure of how everything's put together. Your XRP isn't actually protected right now. If it's in your personal name, you're open to liabilities. You're open to lawsuits. You're open to creditors, and people are going to find it. Okay, like you bought it on a public exchange, you moved it to a wallet, unless you lost your keys in a boating accident, which everybody claims, they're going to be able to get to it. Okay, they're going to know it's on your balance sheet. So let's just be adults here and do it the right way. Let's structure it and make sure that you protected yourself and your family. So what does that look like? Well, personal ownership has personal liability, period. Every asset in your name is discoverable and auditable by somebody that subpoenas bank records and other things in a lawsuit. Okay. So we need to move these out of your name. We need to get a digital asset LLC created, which separates those assets from you and moves them into that corporation. The rich, and you've heard this before, control everything and own nothing, right? This corporate veil is a big deal. And that's why we structure everything in Wyoming. It's the strongest place in the world for digital assets at this time here in the US. Creditors can't force liquidations of an LLC asset if the corporate veil is maintained. They can only get a charging order against it. And if you've done it the right way, you're already the first creditor in line if you structured it that way. So if and when you pay distributions, you have full control of that. You can move money in and out. It just needs to be documented the right way. And again, maintaining that corporate veil is imperative. And that's why we work with our paralegal group to be able to facilitate that. If you work with us on the LLC, if you're just flying by the seat of your pants and you're doing this without these things, they're going to pierce the corporate veil. Okay. The first thing that they're going to come to you in court with is they're going to ask for board resolutions, meeting minutes, your operating agreement, all the things that you actually need to be able to run a corporation and all the documentation that you're supposed to have. If you don't have that, they're going to say, hey, this is a sole proprietor, disguised as an LLC. and they're going to be able to come after these assets. So you need to make sure these things are done correctly. If you do this in Nevada or South Dakota, there's some other legal pieces there that Wyoming has adopted that allows it to be the best place in the US to structure an LLC to protect your digital assets. And you might think that you even need multiple LLCs, and you could, depending on what you're going to do. So if you're trading these assets, it probably has a different NEICS code than if you're holding them and it's a management company managing alternative investments with a specific allocation to digital assets, how we set it up. Inside of a trading LLC, you're not going to get the benefit of long-term capital gains. It's just going to be, profits and losses at the end of the year, and you're going to be taxed as income depending on what those are. Whereas if we structure it through the holding company, we're doing it that way, it's more for long-term swing trades, less than 20 trades a year, especially if you're going to be holding these assets for the long term, like we talked about at the beginning of this. That is the way that you want to go. But if you do have a trading LLC, nothing wrong with that, especially if it is your profession. It's a business, right? You're making money. So you can use that and you can have write-offs. You can do all the fun stuff for the taxes to mitigate taxes, for travel and other things that you're doing that are business related. Things that are actually required for your business. Like you can't just buy a Ferrari and write it off, okay? Like it has to be specific to your business and the actual function within your business to be able to get the write-offs. Make sure you're working with a good CPA when filing your taxes on this stuff. But again, if you're doing it the way that we're going to talk about, probably not going to have any taxes because you're going to be borrowing against it. So you definitely want to segregate stuff out. You might even want to, have trusts and other things we're going to talk about a little bit later in the video to separate things even further and provide even deeper protections when it comes to probate and some other stuff. So back to the pieces that you're going to need, if you're sued and you're in court and they want to make sure that corporate bail is in place, you're going to need the operating agreement. A lot of people skimp on this. They go to LegalZoom, they get someone off the internet. Look, you need an attorney to draft this stuff. You want somebody to represent you in court with these things. If you're representing yourself and it's just some fly-by-night thing, again, they're going to pierce the corporate veil and you're going to lose your assets. So this is important. If this is important to you and you do believe that your wealth is going to grow substantially, there are costs that come along with that. But paying them is like paying for insurance. You know that you're going to be protected when the time comes. So in that operating agreement, you need to discuss private key management. Who signs for what when? What's the governance on how things move? Is multi-sig required for how you're moving your assets? If you're working with digital wealth partners, at our group, we have a multi-sig process, and that's laid out in the operating agreement that we provide. If you're receiving forks or airdrops or other things, how is that done? Is it taxable income? Are you going to hold it in a separate account? What does that look like? Again, these things need to be provisions in your operating agreement. Emergency access mechanisms. What's the security around these digital assets? Is it in compliance with the regulation? Again, just want to impress upon you how much more complex it is than just getting an operating agreement offline and signing it. It does not work and will not stand up in court. What's your digital asset succession plan within your LLC? Who are the other managing members? Is it member managed? Is it manager managed? Is your spouse on there? Do you qualify for a qualified joint venture, depending on what state you're in? There's a lot of things here. So again, just want to reiterate, if you're not working with an attorney or professionals, I would highly suggest that you do so to make sure that this stuff's maintained correctly. So let's say you don't pay your taxes or you get audited. The IRS and the courts are going to need paper trails and they need clean ones, right? So you're going to have to notarize that operating agreement with the timestamp of the proof of when you move the assets in there. We set up single member LLCs or family limited partnerships because both of those are not going to have tax implications when you move the assets into the LLC. It's a capital contribution to start the business. You're exchanging that for the equity. There's no step up in basis or change in time frame, so you're good to go. And the notarization, if you're going to use your cold wallet that already exists, because that's the way that I think is easiest, you don't want to have to go set up a bank account, buy another cold wallet with the LLC, send your money from your personal account into the cold wallet that you just bought, and then record that as a written action. You could do it that way, but it's overcomplicated. You would rather just denote the wallet that you have right there, already set, cold wallet ideally, not on an exchange, with your digital assets in it. You're going to have the asset itself, what it is, HBAR, XRP, XLM, Bitcoin, ETH, whatever you got, the amount of tokens that you have, and then the dollar amount on the day that you transferred it in there. And that's what you're going to list on your capital contributions page. You're going to list all the assets that you want to contribute to the LLC to start it, and you're going to get that notarized. And again, that serves as the timestamp of when that transaction took place. And voila, your assets are now in the LLC, out of your personal name. You've removed that personal liability and those potential problems that can happen if somebody sues you, okay? And you're going to document everything, the date and time of transfer, the wallet addresses, like I mentioned, the amount of XRP, the dollar amount on the day of transfer, and the business purpose for the notarization. You're also going to make sure that if you're doing it right, you've got board resolutions, opening exchange accounts when you're creating those. And if you are using your personal account to continue to fund your LLC wallet, again, you're going to want to make sure that those transactions are denoted somewhere. They all happen on, so you can use that as your registry. But unfortunately, legal hasn't caught up with blockchain yet. And so they want a separate register of all of these transactions. So if you're going to move them between wallets, or you're going to borrow against it, or you're going to add or remove members on the LLC, all of those things are going to require board resolutions, and you want to be documenting those. Again, for the corporate veil. Meeting minutes. This is big. Each quarter, you're going to sit down and you're going to have a meeting with yourself about the LLC or your spouse or whoever else is on the board with you. And you're going to write out what you guys talked about. It's pretty simple, not overcomplicated, but you need to be doing it on a regular basis. Again, that's going to be denoted in your operating agreement, making sure you're meeting those timeframes, whatever is designated there. You're also going to document major decisions, right? So if you're going to make a purchase out of the LLC, or again, you're going to borrow against it, or you're going to invest in a new asset, all those things need to be documented. You're going to write out, the meeting minutes and the board resolution for each one of those. You want to keep both digital and physical records. And again, like I said, the law hasn't caught up here. I think the register on your wallet is auditable, it's transparent, it's immutable. All those transactions took place, and you obviously did them because you were in control of the wallet. But again, the courts and everybody else still want you to have separate records. So the ones that you have separate are going to be the ones they're looking at. You also want to have this, backed up somewhere. So if there's a fire or you lose access or whatever happens, you have these that you can pull them down. So back them up on the cloud in a secure, Dropbox or a Google Drive, something with multi-factor authentication that only you have access to, or the other people on your board have access to. You want backups of these things, or maybe even keep them in a safety deposit box somewhere. You just want separation in case you lose them or you can't access them for some reason. You got your assets in the LLC. You understand the corporate documentation that needs to take place. And again, if this sounds overwhelming, you can work with Digital Family Office and Digital Ascension Group, and we will provide this for you. We have a group that we work with that, calls you 10 times a year. You have a rep that you work with. They make sure all this stuff's documented for you. They make it super simple and easy, and they'll make sure that it's, held somewhere separate of you in case something happens, so that you have it when you are sued or somebody comes after you. You can show this, boom, corporate veil. They can't get anything. Okay. Great creditor protection there in Wyoming. And we'll get into probate, again, passing it to the next generation. It's going to be a little bit different. And then also, if you're going to move it out of your taxable estate, it's also a little bit different. Most of the time with these LLCs, you're going to file as a disregarded entity until it does have income. That's a question I get all the time. I thought we had to be in business. I thought we had to be making money. You do. However, the IRS gives a grace period for 2 or 3 years where you can file as a disregarded entity, which means it's sat there, it's funded, doesn't have to be doing anything. You are okay. And you filed the form for that, and it's an easy tax filing. Now, once you do have income and things are moving, you're going to want to file as an S Corp. And there's some other specifications and things you need to be doing in order to make sure that you qualify for that. You have to pay yourself a regular salary out of the business. In the eyes of the IRS, a reasonable salary is somewhere between $50,000 and $70,000 a year if you were managing an LLC or a corporation, right? So you're going to have to pay W-2 taxes on that. It's going to be an extra 13.5%. But anything beyond that, you can take out as distributions. And again, if you're borrowing against it, a lot of easy ways to mitigate taxes there. So now how are you going to hold it? Like we just talked about, if you have multi-sig operations, if you have governance built around who has access to what when inside that operating agreement, you're probably going to need institutional custody. Your hardware wallet is going to protect you from hackers, but not the courts. Okay. When you have court order, you must surrender or provide the keys or face jail. I know everybody's going to say, oh, I lost it in my boating accident. Look, again, let's be adults here and be a professional and operate your business as such. Okay. Crypto is maturing into a huge asset class. And if you want the benefits and all the things that come along with that, you're going to have to, take the other piece with it. And that is that this stuff is going to be on your balance sheet and visible. Okay. Institutional custody is a game changer for this. It's got crime insurance, covers theft, fraud, and employee dishonesty. It's bankruptcy remote, never commingled. Your assets are separated from everybody else. Still in your name. That's a big piece of it. If you send it to an exchange, you don't get any of this stuff. You have no key access. So nobody ever actually sees the private keys here. They're held on a proprietary blockchain. They are encrypted, they're sharded, they're held across HSMs. If you're working with somebody that is a credible, qualified custodian, they have to have FIPS standards here in the US. In order to meet that, there has to be HSMs or hardware security modules that they're using as part of their security process. Anchorage, Ripple, Medico is a software that uses that, and a few others, right? And there are other state chartered banks and other people that are working on some of these things, and some of them also use HSM technology and meet those requirements. So you're going to want this, especially as things escalate in value. You don't want to be holding $2 million, $5 million, $10 million, $100 million on a flash drive that you carry around in your pocket that you could lose the keys to. Your loved ones are not going to be taken care of. They're not on the account. What happens if something happens to you? You want to remove that risk. You want to protect these assets and secure them for your family, right? So there's no multi-party security. There's no governance built into that cold wallet. You have access, it's one sign, and you move assets. And that's great for being quick and nimble and all those things. But again, when it comes to protecting the assets, you probably want multi-sig for multiple reasons. The other piece is the institutional custody's got to have professional management. There's counterparties. They're going to verify that you're not under duress, that somebody's not trying to steal things from you. And they have protections in place to make sure that that's not the case and that you're doing this of your own volition and you're making good choices, right? So you have an advisor, you have a counterparty, you can make sure that you are making the best choices for yourself. At the end of the day, our clients make choices. We do what they say. If they say, send me my assets right now, send them over here right now, even if we know it's wire fraud, just like a bank, we do what they say. But at least you have some counsel to make sure you're making the best decisions for you and your family. If you're working with the right people, major providers offer level 4 facility HSMs. Again, hardware security modules that are holding the sharded keys that are encrypted all over the globe that's randomized, right? They're globally distributed so that you don't have, I can't say that it's quantum proof, but it is absolutely quantum resistant. And these are all SOC 2 audited. They're at a high level of standard and compliance. So, what does that type of thing cost? A lot of people are like, that sounds great, but it's free on my cold wallet. And I completely understand. Again, give and take, right? And as your assets escalate in value, you can afford these things. And if you want to protect your family, it's again, like the insurance. So depending on how much XRP you have, we have some clients that pay as little as 20 basis points if they are large asset holders of XRP that are working with digital wealth partners. So it comes down to you. Is it worth it? Your keys can't be lost, stolen, or court ordered if it's in institutional custody. It's separated out, it's safe, it's segregated, things are protected. And you want to make sure that things are done the right way. If you do really believe that these assets are going to continue to grow in value and your family's going to use them 100 years from now, you want to make sure that they are protected. So that goes back to maintaining the corporate veil. 95% of LLCs have pierced veils. Please don't be one of them. Some of these common mistakes that allow you or the court to pierce the veil is paying for personal expenses out of the LLC. Don't do that. Pay yourself a reasonable salary for other things, or make sure that it is a business expense if you are paying out of the business account or with your digital assets, and you're good. If you're using the LLC wallet for personal transactions, don't do it. Again, send it to your personal wallet. I know these are extra steps, but they're going to make such a big difference if something happens. Not holding your annual meetings, another one. Again, like we talked about, it's a simple thing. You have to, document it. It's kind of a pain in the ass. But again, it's going to provide you all these benefits and protections if you're doing these things. If you are moving stuff around or commingling assets between your personal accounts and your business account, again, you need the separation. You have to have the separation from your personal assets and your LLC. It can't be, you have control, which is still great, but you do have to have the governance and make sure that you're following things correctly. So one example I have for you guys is our client used an XRP wallet that they had in their LLC to buy their personal NFT. They had, $5 million in XRP, and they decided to do this. That puts their whole portfolio at risk. Please, please, please don't do it, right? It seems so simple, but that NFT needs to be in the business. You don't need it in your personal name for your PFP on something, and it's silly, right? And maybe you're getting airdrops or other stuff. Again, you just want to make sure it's structured the right way and you're doing the right thing and it stays inside the business if you're using business funds in order to do that. So the solution for all of this, again, if you're working with us, we make sure that all this is done the right way, and we work with you on a regular basis to make sure that you're operating and you're maintaining the corporate veil. But again, some examples of the discipline that's required is your LLC wallet is only for LLC transactions. Your personal wallet is only for personal use, period. You're going to document everything. Inter-entity transfers, between the two, written consent, written action. Pretty simple. Again, it's right there on chain. I know that it seems redundant, but you need to be doing it. If you're going to borrow assets out, of the LLC into your personal name. Take a loan, right? You can loan to yourself. You're your own bank. Another great strategy here. It needs to be done the right way. It needs to be documented. It can't just be some fly by night. Oh, I took them out there. It was a loan, da da da. No. You have to sign on both sides of that. There has to be documentation and it needs to be papered. And if you're going to be taking those distributions we talked about that are, written in your operating agreement on a quarterly basis or monthly basis or annual basis, whatever it is, those need to be done correctly and they need to be documented, right? So again, just make sure you're doing this the right way. I know that it sounds complicated, but if you're working with the right professionals, it can be super simple. Just a couple, hours out of your year to make sure that you have all the protections for your assets and your family. So let's say you've done all that. You got your assets in the LLC, you're protected, you got them in institutional custody, you're crushing it, you've been proactive, and you're doing everything to set yourself up for the future. The question I get inevitably when people get to this point is, what do I do next? Well, the next piece is sit on your hands most of the time. But if you've got somewhere between $500,000 and $1 million in digital assets in your portfolio, and that could be, across multiple assets, it could be all in XRP, it could be all in Bitcoin, it doesn't matter. You want to start looking at an asset protection trust, especially if you believe the assets are going to continue to go up in value, not in perpetuity, but substantially from where they're at today. And we set those up again in Wyoming for a lot of the reasons that I mentioned before. The regulations there in Wyoming are the most favorable when it comes to digital assets. You get, the same protections that you would get in Nevada for the charging orders. Asset protection trusts are extremely strong in both those jurisdictions. And then last but not least, you got the probate piece of it. You're not going to get that same protection with the LLC. You get creditor protection if you maintain the corporate veil, and that happens very quickly. An asset protection trust is going to take 2 years to season in the creditor protection, okay? But you're going to use the asset protection trust to own some of the LLC or all of the LLC that you've created, or you're going to move assets from the LLC to fund the trust. It's a couple different ways that you can do this. You want to work with an estate planner, a tax attorney, somebody that knows what they're doing with digital assets. Don't just, again, go to, your standard CPA or somebody that you are hoping knows about this stuff. You need to find the right professionals. If you need those professionals, you can reach out to us at Digital Ascension Group. But again, there's a lot of people out there. We have people that we trust and we know are doing a good job, but you may find people as well. So just make sure you're working with the right people when you're doing this. So over the long term, ideally, the assets are held in an LLC that's owned by the trust. The LLC provides a credit chassis and many other things. You also might want to have an LLC outside of the trust. And the reason for that is assets that produce income inside the trust, when it's over $15,000 a year, the tax at 37.5%. You're like, well, I thought I moved it into a trust to save taxes. That's the tax law. You can pass those taxes over to the LLC that it has some equity ownership in or is adjacent that is yours if you haven't gifted the assets out of your taxable estate, because that's a whole nother piece. And you can lower the tax burden. Right. So let's say it was $200,000 that you made in the trust that you passed to the LLC, you passed the taxes to the LLC. Now, instead of paying 37.5%, it's going to pay like 20%. And you can use things out of the LLC to be able to write that off. Or this is a mechanism by which you can transfer assets from outside the trust into the trust. And what I mean by that is the assets are going to be compounding inside the trust at a pretty large rate. And maybe you keep a portion out here in the LLC. And as you need to pay the taxes, you continue to let these compound, you pass the taxes over here to the LLC, and you sell off a portion of these assets or use them to also produce income to cover the taxes for the trust so that you don't ever have to sell assets and they continue to compound. Again, wealthy people know how to do this. They know how to structure it. If you're working with us, that's one of the things that we do. Make sure you're working with competent professionals. And again, all of this needs to be documented, right? Transfers, structuring, all of that. You also might look at international options. I know a lot of people are concerned about the government and what's going on. Not so much, after this recent election, but I still think, people are concerned and rightly so. There's multiple jurisdictions that people want to get out of over time or move their assets or protect their assets. Many people look at a Cook Islands trust. It's never been penetrated by those other governments, right? It's very separate and strong. We have people that we work with from the Rockefeller family office that we established trigger trusts out there. So, if you want things to waterfall from your asset protection trust here to the asset protection trust there in a moment of duress or when creditors are pursuing you or the government's coming after you, we can absolutely set all that stuff up. And it's not cheap, but we do have it, right? You can also use here in the US and offshore in Bermuda and a few other jurisdictions, private placement life insurance. I don't know how to explain to you the benefit that, well, I can. Rockefellers and many of the other large prominent families here in the US own life insurance companies. And they figured out if they could mix financial products with these life insurance policies, you get asset protection and benefits for the assets to grow tax-free inside the policies. There's obviously some qualifications and specifications for allocations inside those policies and what needs to be done in order to manage them correctly, because the U.S. government knows that, people use them for these things. They're going to get their piece, but if you do it correctly and you don't, mech the policy, it doesn't end up a modified endowment contract because you try to fund too much. You're doing a 5 or 10 pay over time. And again, this is another powerful mechanism for the infinite banking to be able to borrow against the assets that are growing inside that insurance policy, tax-free, that will pass back to your family on the other side of you passing back into your trust where they're protected, right? So you want to layer this stuff. You want to have multiple layers of protections, especially if you think you're going to be worth $50, $100 million or more, billions of dollars, depending on how much XRP you got. These are all things that are going to come into play and things you need to be thinking about and educating yourself on now before price appreciation happens. So what's the retirement math that really changes everything? Let's look at, borrowing against your XRP and how that compares to traditional retirement. In traditional retirement, you're going to save millions of dollars, hopefully, over your lifetime. Hopefully you can get to 5 million, because that's really what it's going to take for you today to really retire comfortably in the US. It's a lot of money for most people, okay? They haven't made a ton of investments. Maybe they're in the stock market. Maybe they got matching for their 401k. They got pension plan. They got some other things. They've stacked cash for, 30, 40, 50 years to get to a point where they can live off of it tax-free if they're borrowing against it, or if they're, producing income with it. It's in annuities or money markets or other things that are low risk, but a decent return, somewhere between 4 and 8% annually. That's going to produce their income. They're still going to owe taxes on that income. Government's going to get theirs, right? And again, I'm with you guys. I hope the IRS goes away, but I have to live in the reality that we exist in today, okay? And borrowing against your assets is always tax-free. It is debt. Now, there's going to be interest that's due with that. But, big but, if Coin or XRP or some of these other digital assets end up becoming tier 1 collateral in the banking system, man, now we're talking about very low interest rates and very high LTV borrowing against these assets. And again, you guys know my position. I'm all in on XRP because I think that that's where it ends up. But today, we do have the capability to borrow against, let's say, half that. So 50% LTV, and you can access that tax-free. There's going to be interest that you owe with that, but you can always, roll your loan over and refinance it at the end of the note with the same collateral. So as long as you're current on the interest payments, boom, good to go. A great way to do this, and something we offer, is you borrow against the XRP, you take a portion of those proceeds, put it into an annuity, and that annuity would pay the interest payments on your debt. So you don't have to worry about it. You get the rest of that money tax-free, okay? You want to make sure this stuff's structured correctly so that you don't lose the assets. Again, here in the short term, the biggest concern is volatility, and that's why we never recommend that people take any more than 50% LTV against their assets. Even that's probably a little bit high. Most of the time, we're recommending, if they are going to do it, somewhere between 20 and 30% LTV is a responsible amount. Again, with the appreciation that we've seen in the market, and if you have a strong belief that things are going to continue to the upside, you might be more aggressive than that. But for most of our clients, that's what we're looking at. And again, not financial advice. Make your own decisions. I'm just pointing out some of the commonalities that we've seen. The higher your net worth, the more you can borrow, right? So as the assets continue to grow, again, you can refinance that note, pull out more tax-free, fund an annuity or something else that's going to be able to service the debt. And you get all that money to go live your lifestyle with, or do other things with, make investments, buy companies, buy real estate, all the other fun stuff people want to do. Donate it. Philanthropic purposes. There's all kinds of things that you can fund tax-free when you're borrowing against your assets. So again, this kind of comes back to how much do you need to live your lifestyle? For me, my freedom number is always twice your dream lifestyle expenses. Okay. So if, I'm probably closer to the 1.2 million in my mind, dream big, right? Go do you, but that's my number. So I would need $50,000 a month to live my dream lifestyle. I would like it. And my rule is you have double that coming in every single month. That way, if there is a loss or something happens, or you want to do something extra, you got it, right? So, that would be about 1.2 million a year at $100,000 a month in income. But really, $50,000 a month in income, I'm going to take care of most of everything that I want to do. I don't, you're really living lavish. You're doing much more than that. So again, that's going to come back to how much XRP you have and what the price is and how much you can borrow against it. You're going to take a portion of that again and fund an annuity or buy another asset that's going to be able to service the debt so that you don't have to worry about making those payments. And again, this is predicated on the appreciation of the asset and its use and utility, where it's going to be much higher stable value a lot of these numbers we're going to talk about, $1,000 XRP, a $5,000 XRP, a $10,000 XRP. If you've got 500 XRP or 2,500 XRP or 10,000 XRP or 100,000 XRP, all of these numbers are going to make a big difference in your ability to fund a lifestyle or make a contribution or do the things that you want to do. So right now, the interest rate on this stuff is a bit higher. It's more aggressive, somewhere between 10 to 15%. Most of the time. Again, once it becomes a tier 1 asset, I think that will come down substantially. We're working on partnerships right now at Digital Wealth Partners to bring that down to somewhere between 5 and 8%, which would be much more tenable for most people. But at this time, that's where things sit. But this is still possible, right? It's just going to take a little bit more money to fund that annuity to be able to service the debt. So as XRP appreciates, the whole idea here is that XRP is going to appreciate faster than the interest accrues, right? So that's the whole point of infinite banking. You're going to be able to borrow against the asset at a reasonable interest rate, and the appreciation on the asset itself is going to continue to outpace whatever the interest rate is. If it moves from $3 to $1,000 or $100 or $50, any of those things are definitely going to outpace the inflation or the interest that you are paying. So every time, it continues to go up, you can refinance the debt, pull more money out, make sure you have enough to service the debt, never sell, never pay taxes, and it's an infinite money glitch. And you could even take out an insurance policy to make sure that it covers whatever you've borrowed so that the assets never get liquidated upon your passing. They flow to your heirs, the beneficiaries, the trust, whatever you've set up. The insurance policy, the cash value there would cover the debt that's owed, and the assets are never sold off. And that's how the big boys play. That's the real game that people use for the infinite banking and the Rockefeller method and all these things that people talk about. Is it's layered protection along with multiple insurance policies to make sure that the assets continue to grow and compound over time and are never liquidated and always stay within the family. So what is this going to take to be possible? We really need a significant appreciation of XRP. And I think that here in 2025, maybe, early 2026, we could see somewhere between a $50 to $2,000 XRP. Again, that's going to be predicated on certain events playing out, the domino theory, other things I've discussed in the past, but with the ETFs, the case settling, all the things that we have culminating for this asset to be successful, I think that those values are highly probable in the near term. What about the medium term? Let's say you have a little bit less XRP and you need some of those higher prices, that $5,000 to $10,000 XRP. 3 to 5 years is how long I think that's going to take. Maybe even less. I think maybe even 2027, a couple years from now, we could see a $10,000 XRP. If we have derivatives and some of the other things come online, again, that might be a little bit aggressive. So we're going to say medium term, 3 to 5 years. And now, you might really need, let's say this is your retirement plan. You're a barber. You threw, $500 at it when it was 30 cents. And you got 1,500 XRP. You're just going to sit on your hands for 5 to 10 years. And when you look up and it's $50,000 to $100,000, you'll be able to do what you need to. And all of these same strategies would still apply, right? That's the beautiful part about this, is building this now before we see these prices. Everybody's going to have access to this stuff. The investment banks and other people will come along, but the people that are here first, that have built this stuff and are part of the XRP family, are going to be the ones that you're going to want to trust. That would be the other piece I would say. Make sure you're surrounding yourself with people now that aren't here to take things from you. It's going to be more difficult post-price appreciation to see who's trying to shark you and take things. If they're willing to work with you now before prices escalate, those are probably the people you want to keep around. Those are the real ones. So just think about that. Make sure you're being progressive and developing those relationships or cultivating that now before we see these very high prices. And again, all these things are going to be based on actual utility of the asset. There's going to be a supply shock. Once that happens, it's going to drive it to a high enough value where it can be used to settle SWIFT. I know a lot of people, Brad talked about Ripple getting 14% of SWIFT in another 5 years. People don't know about R3. SWIFT themselves, they're looking at multiple blockchain technologies to be able to facilitate the data transfer and the instant settlement of $5 trillion per day. That's a huge market for international remittance. And that unlocks all of the Nostro Vostro accounts. That's $27 trillion that are locked up globally that banks are having to hold with counterparty banks in order to settle in those jurisdictions. That gets unlocked. That's a huge jump in GDP and more capital that can be put to work for other things. So the replacement, I don't want to say replacement of SWIFT, but the augmentation of SWIFT's ability to settle real time using XRP is going to be a dramatic increase in GDP and efficiency globally for global economies. You've also got the back end of the stock market. Project Ion was developed in 2019 all the way to 2022 and was finalized between the DTCC and R3. It's running in tandem. All it needs is enough liquidity in a digital asset to be able to settle that has clarity here in the US? Well, guess what? XRP fits the bill. It is the preferred settlement mechanism for Project ION. Okay. So when there's a liquidity crisis, the reverse carry trade unwinds, we have huge unrealized losses. Guess what? They need to de-risk. Boom. Instant settlement kicks in. I think that's when we're going to see a pretty significant appreciation for XRP. And then you've got derivatives, $400 billion, all the way to $4 quadrillion. Nobody even knows the notional value of this stuff. It's leverage upon leverage upon leverage that banks have taken. They have no way to actually analyze the risk in this market. That's why Lehman went down in 2008. And we had the GFC. They need an accounting mechanism and smart contracts and the governance built across this entire asset class for there to be security for people. Right now, it's just gambling that the banks are doing in the derivatives market. And they're very progressive, constructive, algorithmic models that they're running, but they really can't discern the total risk across that. But if it was on a distributed ledger and you had, the compliance built in where they couldn't re-hide the same collateral like they're doing with US Treasuries today, now we have something tenable that's manageable. And I think you might even see more inflows into that asset class because it is the most lucrative one. That's why the banks play there, right? So, with that, just those volumes on daily settlement easily require $10,000 XRP, if not that $50,000 to $100,000 XRP, right? And again, over the next 5 to 7 years, I think that is an inevitability. There's not an option. It's the only solution that exists that I know of today that can actually facilitate that. And that's, again, why I am so convinced about this asset in particular. And so there's all these catalysts. There's all these things that would drive the price, these levels. You need all those things to happen. Right. Until then, retail speculation is not going to drive it above $3. We've seen it time and time again. What we're seeing right now is institutional inflows for the ETFs to be able to, get it to where it's at. You're going to need the reverse carry trade unwinding. You're going to need BlackRock's ETFs and all the other ETFs to go live. You're going to need all the NDAs to be released about Ripple and who they've signed partnerships with and who's using XRP. You're going to need real-time settlement of the stock market, which they already have released the go-ahead on that on May 28th of 2024. They said they moved to T+1 with the option to settle real-time via a digital asset. So it's already there. None of this is moon math. Okay, you can call me a lunatic if you want to, but it's payment protocol economics. This stuff's going to happen. And it's simple supply and demand, right? People want to talk about the total supply of XRP. It's really what's the available supply of XRP and the amount of settlement and value that it's going to have to be moving. Pulling went from $600 to $100,000 over 10 years. Okay. That's 166x. We're going to see that again. And if that hadn't happened, people would, again, shake their head and say that's not possible. We've already seen it. It's possible. So XRP, in my mind, is conservatively going to do at least 100x from here. And that's why all of this is going to work. I've built my entire business, my entire thesis around this. Okay. I have the confidence to come on here and create these videos and this content for you guys so that you can take advantage of it too. So again, I know this sounds like Moon Boy hype, but the math doesn't lie. And again, I just want to reiterate, this is not financial advice. You need to make your own decisions for you and your family. If you do need a financial advisor to tell you what to do and somebody to work with, you can absolutely reach out to Digital Wealth Partners and they can work with you on this. They can buy the XRP, they can hold it in institutional custody, they can help secure it for you and your family over the long term, or Bitcoin or whatever other digital assets you want, okay? They do all that too, but we're talking specifically about this strategy and how it works for XRP today. So let's talk a little bit more about the borrowing, okay? Selling, you're going to get an immediate taxable event. Somewhere between, if you're low end long-term capital gains, it'd be 15%, all the way up to 37.5%. And if you're in California, it's going to be 50% if it's income by the time you pay the state tax and the federal tax and all the other stuff that goes along with that, okay? Borrowing, guess what? Goose egg. 0 taxes, okay? And you keep the asset. That's why the wealthy continue to margin their stock. You see Bezos, you see like Zuckerberg pays himself $1, then he's able to borrow against his stock or sell his stock, right? If they plan on doing that. But most of the time they just borrow against it. You're going to protect this stuff inside of an LLC. You're going to segregate it from your personal name. You're going to maintain the corporate veil. You might set yourself up as the first creditor on that LLC to have additional creditor protection. And again, working with us at Digital Ascension Group and our partners that are paralegals to do all this, we're going to make sure it's done the right way. After that, institutional custody, right? You also need a way to be proving these assets exist. And I've seen other people use DeFi protocols. I'm not knocking DeFi protocols. They're great. Aave, Compound, and there's many others. or you might use a centralized exchange like Nexo, okay? In those circumstances, you have counterparty risk, period. If they decide they want to liquidate your assets, they can. Smart contract, if you hit a certain threshold, they're liquidating. You don't get the chance to buy them back. You don't get a chance to top up your margin call. They're not going to work with you. If it's inside institutional custody and you're working with regulated partners, there's a human element of this to make sure that you're protecting yourself to the downside and limiting risk there in comparison to some of the other options that are out there. Again, responsible LTV is going to be paramount on this, especially while the asset class is volatile. Our partners allow you to borrow up to 50% LTV. Most of the time, 20 or 30%, I think, is much more responsible. You got to be covering the interest payments. Okay. Again, a great way to do that would be to take a portion of those funds you borrowed, set up an annuity, and that annuity will cover it every single month so that you don't have to worry about it. And you can refinance the loan after 12 months. You get all that other money to do whatever you want to with it. You could also take out a reinsurance policy with a portion of what you borrowed to pay off that debt for the full amount. If God forbid something happens to you and you're not able to refinance it or pay it back in time, the insurance policy is going to pay out enough money to cover that debt so that they don't have to liquidate the assets. You want the assets to pass to your heirs. Okay. And if it's less than the lifetime gift tax threshold, and there's other things on the LLC that we can talk about to help you gift more of the assets out of your estate. But right now in the US, you get close to 28 million between you and your spouse that you can gift out of your taxable estate, or upon your passing gets a step up in basis to your heirs. So that means if you bought the XRP at 30 cents and it goes to $1,000 and God forbid you pass away, they now get that XRP up to $28 million of it at that $1,000 basis. So if they want to sell it, there's no capital gains for them, which is great, but maybe not so great. Maybe you don't want them to sell it and you want to saddle them with the tax implications. And that's when you would have gifted it out of your estate and used your lifetime gift tax while you were still alive. So again, we always work with families to do what's best for them, their long-term vision, and their heirs. But just walking you through how some of that works. So kind of back to the beginning of it. This is what the wealthy do. This is how Elon bought Twitter. He borrowed against his Tesla and SpaceX stock, $40 billion, and bought Twitter, okay? He didn't have the money. He didn't have to sell that other stock. He still gets the upside and the appreciation there. And he never had to sell it or deal with the taxes on it because he just borrowed against it to buy Twitter. So you're going to use the same strategy with just a different asset class. The wealthy never sell appreciating assets. They continue to grow and compound their wealth, and this is how they do it with leverage. So what's the hidden cost of doing nothing? Well, let me paint a picture for you of what happens without wealth protection. First scenario, you slip and fall. Somebody falls on your property. They sue you. The plaintiff discovers your XRP. Court orders you to liquidate your XRP. You refuse. You're in contempt now, okay? And you're going to go to jail. You've lost everything in your personal name, and now you're in jail. Not good. All of that could have been mitigated if you had just set up the LLC and separated that from your personal estate, right? Again, we always want to segregate properties too. If you have some real estate and somebody falls on your property, you would like that siloed within its own LLC. Anything that's going to have personal liability or problems, you want to segregate from yourself and your other assets. Next up, you die unexpectedly. God forbid. Nobody wants to talk about that. I don't either, but it does happen. And unfortunately, your family doesn't know about your keys. They don't know how to get to your crypto. Your wife sees a flash drive and throws it away. She doesn't even know that it's there. Maybe it's in your will. Maybe you put a crypto buddy in your will, which is great. Nothing wrong with that. Maybe your crypto buddy decides he's going to keep those assets and not tell your family about. When money's involved, crazy things happen, okay? If it's $50 million, it could be lost forever. The estate owner's taxes, and now they can't get to the assets. Your estate would also owe the taxes on it if it's listed in your will. And now they don't know how to get to it. So even though it passed to them, they have no access to it to even be able to pay. The family would be forced to sell other assets just to cover the taxes on the money that they never got because they don't have the keys on your assets. Like, this is a horrible scenario that could play out. Or again, somebody could run off with it. Institutional custody and the right structures prevents all of this from happening. Another option that would be horrible would be the IRS audits you and you've commingled transactions. And you can't prove your investment intent. Ordinary income versus capital gains, which is which, you lose. And 57% would go to taxes instead of the 20%, right? So again, having the corporate veil, maintaining the separation, doing all the things that you're supposed to be doing, maybe you even did it the right way. You went to LegalZoom, you set up your LLC, you have your operating agreement, but you didn't maintain the corporate veil and you get audited by the IRS and you've commingled a bunch of stuff. Again, make sure you're working with the right professionals and doing this the right way, and you get all the protections and benefits. But if you don't, you're putting yourself at risk. And last but not least, and again, this is another one that nobody likes to talk about, but it does happen frequently here in the US, especially divorce. Your spouse is going to get 50% of your crypto. No entity separation. You get married, after you set up the LLC, but you commingled things, she's going to get it or he's going to get it. Your spouse is going to get your stuff. Right. So again, you want to make sure that this stuff is protected, separated, and you haven't commingled things. And again, depending on the state, this may still happen. Right. In a divorce scenario, make sure you're picking the right partner would be the main piece. And then in addition to that, if you are previous to marriage, when you purchase these assets and you haven't done it while you've been in a relationship, prenup, I know that's not a fun conversation, but make sure you're getting those things put in place to protect yourself and your assets. People are not always what they seem, and you want to make sure that this stuff is protected for your beneficiaries, your kiddos, your heirs, whoever else you're trying to help. You might have philanthropic focuses or something you want to contribute to. If you're not doing this the right way, if you're not documenting things, if you're not working with the right professionals to set things up, you're putting your entire life savings potentially at risk. So let's get back to the fun topic, okay? If you're doing all this the right way, and you've set up the proper structures, what's your timeline to freedom here, okay? And year one, you're just going to continue to accumulate and you're going to, structure things properly. I would start working on that now. If you have, somewhere north of $50,000 to $80,000 in your digital asset portfolio, whether it's XRP, XLM, XDC, HBAR, Bitcoin, ETH, Solana, Matic, Chainlink, whatever you got, if you're diversified or siloed, you want to make sure that things are structured properly, okay? Over the next couple years, price movement is going to happen. Utility is going to take place. Assets are going to appreciate substantially. And then you're going to be able to borrow against these appreciated assets. You can already do it today if you want to. And again, borrowing at a lower basis, you get to refinance it at higher and higher prices, right? It's a fun game to play unless it goes down. Then it's not so fun. But all these things are in place. You'd be able to borrow against your assets. Let's say you're at the lower amounts that we talked about early on. Maybe you don't have 50,000 XRP or 10,000 XRP. You got 500 XRP. You've got, what would be the minimum? You'd need a $3 XRP. You probably need 20,000 XRP before the LLC starts to make sense today, okay? But you can set stuff up now. If you're not quite to that level, you probably just need to keep buying. The ROI is better to continue to buy digital assets at the current prices before they date versus spending a couple grand on an LLC. You'll be able to do that later after they've gone up. Trust, same way, $500,000 to $1 million in your portfolio. Now we're starting to think about asset protection trusts, especially if it's at that value now before it continues to go up. So over the next 5 years, year one, you structure stuff, you're accumulating. Year 2 and 3, you get the appreciation, utility kicks in. Year 3 and 4, you're able to borrow against the assets and do all the fun stuff we talked about a little bit earlier with the annuity, reinsurance, and all that stuff. And year 4 and 5, you're able to refinance things as it continues to go up and up in value. And you're able to increase your lifestyle and basically retire. You can walk away from that day job, that W-2, that time that takes away from your children and your family, away from your hobbies, away from your interests. Hopefully you're earlier in life, or even if you're later in life, you'll be able to spend more time with your grandkids, with your babies. Make sure that your wife doesn't have to work. Retire your mom or your parents. People have all these aspirations and goals, and this is an opportunity to be able to accomplish those. It's life-changing. And now, within 5 years, if you've done this correctly, and you've done all the steps, you've structured it right, you have the right partners, you're living completely tax-free off of the borrowed money on your assets that continue to appreciate. And you have assets that are appreciating and cash flowing, things that are structured the right way to be able to offset taxes. You're good to go. Your XRP will continue to appreciate. Again, I think it's going to go to $50,000 to $100,000 over the next 5 to 7 years. Your compounding effect is going to continue to accelerate with your wealth because you're not having to sell off assets, right? Or you've even got them in strategies like we have where they're compounding and you're getting more XRP over that period of time. You're going to be able to retire early. Most people don't retire until 65 or later at this point. All of the retirement accounts are 59 and a half before you can even draw from them, right? I had a retirement account. I liquidated it to put it in XRP. I'm not saying that's the right thing for you to do. I'm just telling you what I did because I want to be able to spend more time with my family and accomplish great things, live a wonderful lifestyle, and not have to work for 50 years to maybe retire one day, right? I think that a lot of the narrative that's been portrayed by previous generations worked great for their lifetime, but things are changing. And here's an opportunity to do things different. And I think, if you're watching this, you're probably taking advantage of it. So let's get into the last couple action steps here for your 5-year plan. Like, what do you actually need to do? Week 1, calculate your freedom number. Write down everything that you want for your dream lifestyle. What does it look like? The cars, the house, the vacations, private school for your kids college. Dream big. Whatever you want. Think big on this because it's possible, okay? And then figure out what that costs. If you financed it, what's that monthly payment cost on all that stuff? How much money do you actually need to lead and live your dream life, okay? Week 2, you're going to consult with a knowledgeable attorney. You're going to work with our team or another one to be able to start setting up the LLC, putting things together in the proper jurisdictions, have the operating agreement reflect what you need it to reflect for the governance and all the stuff we talked about, go through meeting minutes and board resolutions and all the stuff that you need. At that same time, you're probably going to transfer your assets into the LLC. You're going to get that notarized. Make sure it's good. Okay. Within another week after that, if you do have, north of $500,000 in assets, or, at least 100,000 XRP, you can work with Digital Wealth Partners to get your assets into institutional custody, where your spouse is on your account, your beneficiaries are on your account, kiddos are taken care of. They don't have to know about the keys, understand crypto, none of it. They will get the assets, just like a Schwab account with beneficiaries on it if you were to pass away. And you're going to get all the fun stuff, access to the investments, yield, return, borrow, lend, all the things that people have been talking about for a long time. We've already got it at Digital Wealth Partners. Once you've got that in institutional custody, once the assets continue to appreciate, you might start looking at a trust structure, right? Again, like I talked about before, if you have at least $500,000, which is our minimum, then you probably need to start looking at that. An asset protection trust in Wyoming, you might look at a spendthrift trust. The other thing I want to say about trusts is their contract law. You can add provisions, remove provisions, do a bunch of things. There's people that have created marketing campaigns for dynasty trusts and waterfall trusts and insurance trusts and all these things. But really what it is it's contract law, and it's written a specific way to have specific effects. And if you're working with a competent attorney, they can weave that tapestry of contract law where you're putting whatever provisions you want in there. You can have an asset protection trust with a spendthrift provision. That's where your descendants or the beneficiaries can't liquidate assets. They can only live off the distributions or dividends that are paid to them, right? It's a great way to make sure, if they don't have the financial education, they're later in life, they're not going to mess it up. Maybe you have a generational skipping provision in there and that's a great tax benefit also. It would pass to your grandchildren tax-free. There's a lot of things that you can do and structure if you're working with competent people. And again, I would highly suggest that you do that when you start looking at the trust. Every single quarter, you need to maintain the formalities for this stuff. I know it's not fun. It's arduous. You got to set aside time, but you need to make sure that you're doing the board resolutions. If there's been any changes or things, those need to be documented, right? So keeping up with all this stuff. And if you're working with our paralegal group at Digital Ascension Group, they're going to make sure all that stuff's done for you. So they're going to take, 10, 15 minutes a couple times a year, and you'll be good to go. You're going to have to set up bank accounts and make sure all that's structured the right way too. We have partners for that as well. So when you're setting up those bank accounts, you want to make sure that you have developed those relationships. You're going to be looking for private banking relationships. We can make introductions if you have large amounts of capital, or you plan to take large amounts of capital either through loans or selling things off. Taking profit is never wrong. I do want to say that, we talked about borrowing this whole time tax-free. If you're okay with paying the taxes, pay the taxes. Sometimes people, that's what they want to do. And there's nothing wrong with that. You're never going to go broke taking profit until you don't allocate enough money for the taxes and you blow it on liabilities. You always want to make sure that your assets are compounding and you're not compounding liabilities. You want to make sure that the assets are going faster than your lifestyle at all times. So just think about that. But you want to make sure that these banking relationships are in place before price appreciation, and you're going to be taking these large distributions. And the other piece is if you move these large sums of money to your personal bank account, they're going to freeze the accounts. So take that into consideration. If it's a business account and it's an alternative investment and you've structured things the right way, you've formed these relationships, not going to have a problem. Your money's going to flow through. You're going to have access, and you're going to be really happy. You also want to network with others on the same path, right? So you're going to want to surround yourself with like-minded people that are going to bring you up, people that understand what you've been through in this process, cultivate relationships with them to continue to get value on the other side of price appreciation, and people that get you, right? Like it's hard to find other people that understand this a lot of the time. You feel ostracized. If that's something you're interested in, we do have a mastermind. You can go to beyondbroke.com. You can join the mastermind and be a part of a community of other people that have very aligned interests with you and also significant allocation to this asset class. And like we talked about, the wealthy never sell appreciating assets. That is the way that they stay wealthy. The fiat that you get from other jobs and we trade in today, it gets inflated away. We've seen the dollar lose 97% of its value over the last 100 years. Those that own assets continue to get wealthier and wealthier. XRP, Bitcoin, these other digital assets are assets, and they're your hedge against a imploding monetary system. And I think they will end up being the backbone of the next one. And then last but not least, I want to talk about thinking a little bit differently around who owns this money. It's yours. You made the investment. You did the things to cultivate it and grow it. You structured the estate. You put things done You did things the right way to make sure it's protected. But as it grows, you should shift your mindset a little bit to becoming a steward of this capital for your family, for helping it last for generations. You want to cultivate that same culture and belief within your children if you want them to also have the same mindset when it comes to this stuff. Most people are rags to riches and back to rags in 3 generations. You've all heard that. There's different sayings across multiple cultures. First generation makes it. The second generation maintains it. The third generation loses it because they become entitled. They think that, they've always had money. They'll always have money. You look at the Vanderbilts, one of the wealthiest families that's ever existed, burnt through all of it in 3 generations. If you can cultivate a culture within your family of being a steward of the family's capital and their responsibility for that early on as they're growing up and taking low risk, like that's the other piece of this mindset. The paradigm shift that a lot of people are going to have is they've taken a lot of risk in order to make this money. You should only have to get rich once. And maintaining your wealth is a different perspective and mindset than taking all the risk in and going all in on one thing. You want the diversification. You want non-correlated asset classes and investments. You want things to be positioned in a way to make sure that that wealth is going to be maintained over generations, potentially the next century. Is how family offices look at it. So just, again, try to start cultivating that mindset, thinking through this. Don't be like the dog chasing the car where he catches it and then gets run over. So in closing, retirement isn't about hitting 65 anymore. It's about having enough assets that generate income without depleting the principal. And with XRP positioned to become the global settlement layer, we're looking at the greatest wealth accumulation opportunity in history that I know of. And I know that seems crazy to say, but here's the brutal truth. If you haven't protected your XRP properly, you're building your retirement on sand. One lawsuit, one accident, one vindictive ex-spouse, and your retirement is gone. So the cost to protect it, the professional setup, and annual maintenance fees vary, but are completely worth it. What's the cost of protecting everything that you've worked so hard for, right? You want to make sure it's done right. So whether you have 500 XRP, 50,000 XRP, a million XRP, the strategy remains the same. Protect it first, structure it properly. If you don't ever sell it, the only difference is the time frame on how long it would take for you to borrow against it and start retiring. So if you're serious about implementing this 5-year retirement plan with proper protection, you need to be around others who get it. And in the mastermind that I talked about, we have over 6,000 members executing exactly what we've talked about here. We're sharing the best structures and connecting you with the best of professionals, CPAs, attorneys, wealth management, philanthropic, concierge service, all of it. And we hold each other accountable, which is the best part. The link's pinned in the comments below if you want to go check that out. And then we also have everything else in the comments below if you want to work with us to set things up the right way from the beginning. So remember, billionaires borrow against their assets. They never pay taxes on unrealized gains, and they pass everything to their heirs, but they also protect everything with multiple layers of legal structures. You're not too late. You don't need a million XRP. You just need the right strategy, proper protection, and the patience to let it all play out. So in the next 5 years, you'll potentially be retired on tax-free income with a bulletproof asset protection strategy, or you'll just be naked, holding your XRP, hoping that the next bump doesn't expose you to a legal problem around the corner, okay? It's your choice. But please, whatever you do, protect it first, then grow your wealth. Until next time, stay curious and stay ahead of the curve.